Kevin Disa, CFO of Bajaj Auto, joins us now. Bajaj Auto came out with a good set of numbers and the numbers came out over the weekend. Kevin, before we get into specifics, first a word on quarter gone by for Bajaj Auto. What were the key highlights?
The key highlights basically, which is very good for me, is the increase in market share. As you know that, for example, the products that we have launched have done exceedingly well. The Discover ST, for example, has done, the ST which has been launched has been really done extremely well, done about 32,000. As a result of this, the Discover family overtook Splendor in the month of September as the largest selling brand. And secondly, our market share increased over there from 16% to close to 27%. Again, if you see the Pulsar NS that was launched, that is doing about 8,000, which is taking our Pulsar's numbers up from the market share from 46% to 50%. So this is on the sales side that is extremely encouraging. And overall market share for us has gone up from 23% in April to 27%. I think the slowdown that we have seen in the industry has been met primarily on account of these two new product launches. And this has resulted in us increasing EBITDA margin from 19.3% to 19.7%. Now the increase in margin of 19.3 to 19.7% may sound very small, but you must understand that this has been a very, very tough quarter for the industry, with interest rates being high, fuel costs being high, and above all, I would say that the input cost or the material cost has been at its peak in this quarter.
Kevin, hi, morning. Your margins though have improved by nearly 50 basis points on a sequential basis. Did the improvement in realizations aid the margins, and by how much? And what are the other factors which led to this kind of uptick?
I think the basic reason has been the improvement in the mix that has taken place. We have sold about 6,000 incremental three-wheelers between Q3 and Q4. And like I mentioned, the Pulsar NS and the mix change has given us the additional kicker. And as a company, we are extremely cost conscious. So if you look at material cost as a percentage, that also has come off, because as a company, what we do believe in is in terms of not really sitting down and offering products at a discount. So on 14th of July, we did take up the prices of our vehicles to take care of the increased input costs.
Kevin, what was the realized forex gain during the quarter? Because, that has created a difference in the reported as well as the adjusted EBITDA margins.
See, the reported EBITDA margin that I've given is at about 48.81, and that is considering taking into account the loss on account of unrealized hedge losses that is taking place. So if I net it out, the realized currency is at about 48.81, which was closer to about 49.8 or so for the previous quarter. Going forward, I do not see any loss on account of the hedge that is taking place in the next 6 months. So I believe that for the third and fourth quarter, one should see the realization closer to about 49.5.
Hedge the dollar for the next 6 months?
That's for the next 6 months. Now, as you go into 13-14, we have already started taking covers, and approximately, I would say, 600 million odd US has been covered, where we have got different rates, but the lowest rate that we have covered is at 53. There are adequate contracts also at 55. So at this particular point of time, realization at 53 rupees to the dollar is more or less confirmed for half the exports projected for the next year.
Do you think 19% or 19.1% will now act as a base for Bajaj Auto's operating profit margins?
You see, for me, the thing is the 19 or 20% is more the result of the business performance of individual verticals. And my confidence level comes in not only on account of the fact of where the material movements is, but because of the mix contribution. With Pulsars, with exports, with three-wheelers contributing significantly to the overall volumes of the game, and spare parts, which again forms close to about 9% of my total sales in revenue terms, all these are above the 20% EBITDA margins, and therefore for me a margin of between 19 to 20% is maintainable.
Kevin, your press release states that your motorcycle sales in the Sri Lankan market have recovered to now 7,500 units per month. Do you see further improvement there going forward, and how much? And more importantly, back home, do you expect an uptick because of the festive season demand?
I would say that the Sri Lanka sales, and if we look at the press release, what we have mentioned is about the three-wheelers, which was averaging about 10,000, is doing 7,500. and motorcycles which are averaging about 12,000 is doing right now about 6,500. I think that is now the further increase will depend significantly on the economy and not so much on the pricing action of either the company or the dealership. It's the same situation that we see in India where the growth rate for the motorcycle industry for the full half year has been 1% negative, whereas for the second quarter it has been a negative 9%. Now part of the explanation of the 9% fall in the second quarter could be explained by the fact of the shifting of Dasara Diwali to into the third quarter. Having said that, my own estimate, and let me be very candid and clear, that means my own estimate is for the year at large, I would see that the domestic industry would be at about 4 to 5% growth at the most, given the realized fact that we have seen what's happening in Dasara. The Dasara sales have been good, but not been great. And this is what I'm saying is for the industry.
But when you say Dussehra sales have been good, they've not been great for the industry. What's happening with Bajaj Auto? Your Dussehra sales have been good or great?
It's been good.
What is good for you? What is that number which is, convincing you to use the word good?
It is good because what I've seen is the sales of the new products have been extremely exciting and my market share has improved.
Are you expecting, and what are the feelers you're getting from your dealers when it comes to the Diwali demand? Because the Dussehra demand is over. Now we should focus on the Diwali demand.
Absolutely. So as far as Diwali demand, I don't see any change in trend or pattern. So we were looking at for the industry as such, we were looking at the Dussehra. We've seen Ganpati being again what I would say good, not great, Dussehra. So I don't see any reason why Diwali should be any different, and hence my call that for the year as such, the growth rate for the industry will be somewhere near about 3 to 4%.
What is your understanding?
I hope I could be wrong and the industry growth is higher.
Okay, what is your understanding?
I beg your pardon?
No, my follow-up question, Kevin, is that what is your understanding when it comes to the inventory levels in the system? First for Bajaj Auto and then for the industry, because I'm getting mixed feelers when I speak to some of my friends.
Sure. As far as Bajaj is concerned, our inventory is about 35 days which is really adequate for what we see required for the dealerships. What we also see is that we are not pushing any inventory into the system. Dealers are required to pay interest for every rupee borrowed from us, and the interest is as steep as about 14%. We have covered all our risk by taking guarantees from the dealer for the excess credit that has been taken. So as from my point of view, it is what dealer wants is what we are lifting. This is not what the company intends putting into the system that was operating. As far as competition is concerned, I would leave it to competition to answer it. It would not be fair for me to answer. But the overall sense that you get from the feeling, and I would say that this is what I also hear from the news and from the marketing channels, is that they may be a little overstocked.
Kevin, you've managed to gain the market share when it comes to Pulsar on a sequential basis and overall as well. Do you hope to better that in the future quarters to come, considering the festive demand is only going to aid your volumes?
You see, the difference basically is that we are addressing this not through pushing vehicles into the system, by actually creating more and more exciting products in the market. We have increased our market share not by price discounts or by dumping stocks, but we have increased it by new product launches. And therefore for us, when we are addressing, and I am very, very confident of increasing our market share from 27% going forward, is on the bank of a new product that will be launched sometime end of December and which will be available in the market pan-India from January onwards. So Kevin, I believe with the 3 products that we have launched in the second half, we should see significant volume and market share growth.
Kevin, final question. Because of the entry of Honda, do you think the industry currently lacks pricing power? And if two-wheeler sales do not improve in next 2 or 3 months, two-wheeler companies could be forced to cut prices or offer discounts?
I don't believe so, because today I think that what the customer is looking at is not just the price of a product but also what the product offers. If you look at the Discover ST 125, which has been, like I mentioned, a runaway success where we sold over 38,000 vehicles, that vehicle has been priced at over 55,000 rupees. The Pulsar 200 NS, which is again a hot selling vehicle, is priced at over 85,000 rupees. So I think the customer today is not just looking at the price but is looking at what is being offered. Is it different? Is it what I would call more exciting rather than a boring product? And a customer in a boring product, even I believe, if it gets price gets downward corrected downwards, it will still not attract the demand. So today, in my own personal view, the growth in the customer market share, the growth will be there by meeting the aspiration of the customer for getting better and better bikes, and not so much as the price.